Hey everyone, welcome back. Hope you guys are having a great Wednesday. Thank you so much for coming in to watch this. We got a lot to talk about today. We got the FASB board making a decision on crypto assets, how that gets reported on the balance sheet of the miners, not only the miners, but other companies as well. We'll talk about that. We have obviously the FOMC also meeting today. They're going to hold still on basically rate hikes, and they will possibly lower rate hikes next year 3 times. We'll see. So we have that to cover, and then we'll also take a look at Hot 8 in, news that's out there right now. Some Cleanspark news, and then we'll get into dilution as far as for the miners over the past year. So we'll look at Q3 numbers from last year to Q3 numbers this year as far as how many shares they had outstanding and what that actually meant for dilution. And we'll look at how much they've grown as well. Okay, but as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research on this. And I'm investing in following coins and companies for full disclosure. Also, for full disclosure, I did buy another 200 shares of Bitfarms today at $2.50, which was pretty much in the morning hours. So I got in quite luckily at that time. Obviously, markets and Bitcoin, everything else went up to date. So also, if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And then let's get into what happened today with Bitcoin. So Bitcoin was kind of trending downwards in the morning. And then after we got the news in the afternoon that the FOMC is not going to be raising rates right now, they're going to hold still. And possibly next year, they're going to decrease by about 75 basis points altogether with 3 possible rate cuts. That kind of spurred the market going forward. And the good news about that is, we'll take a look at it in a minute, but basically it's, what's the word I'm looking for here? I'm drawing a blank right now. I'm sorry. But risk on assets are basically becoming a thing. People are getting interested in that again, right? When interest rates go up, risk on assets tend to do not very well. So this is good. Okay, but nonetheless, let's get into the charts here. Bitcoin obviously was up nicely today. It was up approximately, let's see here, it was up 3.39% on the day. We closed at 42,885. We're down a little bit here right now. Not much. We're down 0.112%, roughly $50 or so on that one. The miners had a fantastic day today. Annie was up 23%. Argo was up 10%. BitDigital was up 9%. BitDeer was up 9%. Bitfarms was up 18%. Cypher was up 5.58%. Cleanspark was up 16.8%. Cores was up 3.58%. DigiHost was actually down today, 4.1%. Go figure. DMG was up 15%. Greenidge was up 4.3%. Hive 9%. Hut 8 6%. Iris Energy up 12%. Marathon was up 12.5%. Mawson was up 4.3%. Riot was up 8.3%. Soluna was down 4.1%. Stronghold was up 14.9%. So that had a nice day today. Wolf also a nice day at 12.8%. And you can see here the ETFs had a nice day as well, with WGMI leading the pack here on those. Hut 8, when we talk about the story here in a minute, I think there's something that maybe investors are not looking into that could be a potentially big growth for them. And we'll talk about that here in a second. But that's basically how the market's played out right now. I don't think there's anything else we want to take a look at here. We will take a look at quickly the network hash rate here, how that's looking right now on the 30-day average. And we want to take a look at the 1-year chart here. And we can see that we are still at approximately 483 exahash right now on the overall Bitcoin network hash rate. So it's not too bad. If we look at the 1-day average, see if we're kind of bouncing around here a little bit. So it's kind of stalling a little bit here, but I don't expect that to last very long. I believe we're going to start going back up come the new year and into 2024 as well. All right, so that's all we have here. Obviously, like I said, one of the stories that we have here is on the FASB. So this is the Financial Accounting Standards Board. They provided some updates on basically how to declare Bitcoin or cryptocurrencies on your balance sheet if you hold them. Right now, I believe, and correct me if I'm wrong on this, but I believe the way that companies had to do it is if they had bought, or in case of miners, if they were hodling, each day that they hodled or they increased the hodl position, whatever that was, for that day, they had to report at the end of the quarter the lowest price of Bitcoin basically at that point and what was the hit on it. I believe that's the case. So that was kind of strange. And then you couldn't bring it back up if Bitcoin was going up. So it was kind of a strange thing that really made no sense on it. And this is obviously a framework that is in the right direction. So here's what it states. The amendments in the ASU improve the accounting for certain crypto assets by requiring an entity to measure those crypto assets at fair value, each reporting period, with changes in fair value recognized in net income. The amendments also improve the information provided to investors about an entity's crypto asset holdings by requiring disclosure about significant holdings, contractual sale restrictions, and changes during the reporting period. So now, if Bitcoin goes up, let's say a miner mines on the very first day of the quarter, 100, no, probably not 100, but let's just say 20 Bitcoins, right? And from that period to the end of the quarter, Bitcoin price goes up 10,000. Well, they just made basically 10,000 on the Bitcoin if they hodl it, if they don't sell it. So they get to report that as positive, right? It's not something that's no longer kind of in the shadows, people trying to figure it out, and it's no longer being reported as only when you're losing on it. So I think this is the right step forward. This is also great for companies that can now put it on their balance sheet, because now they can positively report the increase in value of it, whereas before they couldn't do it. So this might also make more companies willing to put it on their balance sheet, well, Bitcoin that is, which would then be obviously a good step towards Bitcoin adoption and Bitcoin price going up in value. So these are all good things. Okay, so that's there. And then what else we have here? Okay, companies can start doing this, it looks like retroactive, well, not retroactively, but they can start doing it in the future. So the amendments in the ASU are effective for all entities for fiscal years beginning after December 15th, 2024, including interim periods within those fiscal years. Early adoption is permitted for both interim and annual financial statements that have not yet been issued or made available for issuance. If amendments are adopted in an interim period, they must be adopted as of the beginning of the fiscal year that includes the interim period. So I believe companies will be able to do this going forward. I think the way it writes mainly is the companies won't be able to take advantage of it this quarter unless their fiscal year ends earlier in the year. So some companies that have the fiscal year that end in Q3 or Q2, they might be able to take advantage of this. I think more likely the companies that ended in Q3 will be able to take advantage of it going forward, possibly. But we'll have to see on that one. I'm not sure on the exact verbiage in here and what that actually means. I'm not an accountant, so don't quote me on that one. Okay, next. Let's see here. Federal Reserve, we already talked about that, basically. We didn't really cover it, but basically the Federal Reserve holds interest rates. This is good. Obviously, they're going to cut rates. We talked about that, so this is kind of what we got. And obviously, this is a more of a good thing for risk-on assets, which Bitcoin is, miners, things like that. So that's why we're seeing Bitcoin going up today. We saw miners going up. So we already covered this. We're not going to get too far into it here. Next is going to be on Cleanspark. So one of their directors, Mr. Larry McNeil, has sold about 40,000 shares. And this was back on, when was this? On the 8th. So this was last week. Profited about 400 some thousand roughly after taxes, probably less than that. Guessing probably around 200 some thousand after everything is said and done. Let's see here. And that's basically it. So I'm okay. I'm not as concerned with directors selling as I would be with, like, what's his name, Zach and Brad selling. That would be more concerning to me, depending on how much they sold. So directors will sell from time to time, not a big deal. If you see a lot of directors selling at the same time, that could be a concern there. Something's not maybe right there. But one director selling, not a big deal there. It's only 40,000 shares, so it's not too bad. It's not as big of a concern like we saw with Iris Energy selling 1 million shares per brother, right? So those two brothers sold 1 million shares there. That was a little bit more concerning. It still is. But it looks like the market kind of accepted it. And the stock of Iris Energy has been going up, so that's okay there. But we'll see if we get any more selling there. But just wanted to let you guys know that's out there. Not a big deal. Let's take a look at our HUT 8 update. So I think this is actually really important here for HUT 8. And this is based on some of the issues that they had with Validus going back to last year, where Validus was suing him. And then we're going back and forth on courts. Now it looks like Validus is going into Chapter 11 bankruptcy, or just bankruptcy itself. And then here's what we have update on this. So this is actually might be pretty good, and we'll take a look at the numbers for this. But an update on HUT 8's staking horse bid for 4 natural gas power plants, including the North Bay Bitcoin mine. So that's the one that they had issues with, Validus. Down here, so HUT 8 has been informed by the KSV Restructuring, Inc. that the company's previously announced staking horse bid has been declared the successful bid in accordance with a sale and investment solicitation process carried out by KSV. The SISP was conducted in respect for the sale of certain assets of Validus Power, right? If HUT 8's staking horse bid receives final approval from the Ontario Court of Justice and is complete in accordance with its terms, a new Ontario subsidiary of HUT 8, Bidco, will become the owner of assets of certain Validus, and they're going to have basically 80% of that. And let's see here. Macquarie will receive a minority equity interest in Bidco of approximately 20%. So they're teaming up with Macquarie here as well. On completion of the staking horse bid, BidCo would acquire free and clear of any encumbrances, excluding certain permitted encumbrances, 4 natural gas power plants located in Ontario. So this is going to be huge for them, possibly. You got a 40 megawatt facility in, I'm not going to be able to pronounce that, 110 megawatt facility in Kingston, 120 megawatt facility in Iroquois Falls, and 40 megawatt facility and Bitcoin mine in North Bay. So all in all, that totals to be approximately, what is that? That's basically 300, right? You got 40, that's 80, 120, that's 200, plus 110. So we're looking at 330 megawatts of power potentially that they could utilize for their Bitcoin mining. And typically these gas power plants are like peaker plants. So if there's a huge demand for power and the grid doesn't have it, they can start these up and add additional electricity to it. So there might be times where they would have to curtail depending on the power needs that are or for those areas near it. But if we look at the numbers here, if we have 330 megawatts, that equates to 80% of load of that. We would have 264,000 kilowatts or 264 megawatts. And then if we're looking at some of the miners, the newer ones, like the 200 terahash miners for the Antminer S21s, those are about 3,500 watts, so 3.5 thousand watts. They could possibly get into those facilities about 75,000 of those miners, 75,500 on average. That would add them approximately 15 exahash of future growth potential if they are able to do this correctly, right? And then if we're looking at the cost per terahash at $18, maybe they could get it maybe lower at $16, $14. I don't know if they have any credits with Antminer that they could utilize for that to lower the cost. We've seen that done with some of the miners here, but we're using $18, kind of like the average of what we're seeing out there. That total cost would be about $271 million to improve on their fleet, which they definitely need to do that, because if we look at the numbers here for Hut 8 and what they currently have out here, so Hut 8 right now has a lot of miners that are pretty old. We could just say that politely. They have 77 terahash miners out here, which I'm guessing will be probably being plugged up, unplugged as soon as possible. The 96, 87, 89, 90 terahash. And then they have a boatload of these 93 terahash miners here as well. Excuse me. That they would want to probably swap out, get newer miners as well. And then we have the 91 terahash, 84 terahash over here as well. Not sure when those are going to be getting installed, if at all. And then we have the merger with USBTC, which USBTC, I believe, had like on average the 100 terahash miners installed there. So that kind of brought them all down to being at the 7.3 exahash level and basically running at approximately on the average of about 97 terahash per miner. That gave us a roughly estimated 33 joules per terahash, which is pretty bad going into the halving event. You want to be under 30. A lot of the miners are going to be around the low 20s. And that's kind of where they really should go for. So if they can do this, this would definitely help them out tremendously. Obviously, it would mean getting rid of some of the older miners that they have in there and putting these new ones in. So let's just say that they get rid of some of the old ones that Hut 8 had previously to merging with USBTC. You're looking at about maybe 2.5, maybe 3 exahash. So we could add, so that would bring them down to about 4.3. Take out the 3 from here, you're at 12. So that would get into about 16 exahash roughly in good hash rate. That would be, well, newer, more efficient. This would be better for them. But the cost is obviously going to be 271 million on that. Now, Hut 8 obviously doesn't have any issues paying for that because they have a huge HODL position if they wanted to use it. That doesn't mean that they are going to use it. My guess is that they're probably more than likely going to use ATMs or other instruments for financing this if they had to, because they do have about 384 million right now in HODL. And we've seen in the past that even when, and things like in 2022, it wasn't a great year, they were HODLing everything that they could. So they were diluting just to keep the HODL and paying for lights and expenses for payroll, things like that. So I'm guessing that they will probably dilute if they need to do this. On top of this, you're looking at obviously building out infrastructure there as well, buildings, things like that. So you're looking maybe at another, maybe, I don't know, being a power plant, I think that would make it pretty easy to connect to what you already have in there. So you don't need really a substation, things like that. But you obviously need transformers, things like that, power supplies, all that stuff. So maybe another 50 million on top of that, 50 to 100 million possibly. So you're looking at, what is that going to be, 320 to 370 million potentially to get to 15 exahash additional, or in this case, it's going to be about 16 exahash if they get rid of some of the older miners. But I think this is a huge potential thing for them potentially going forward to grow their hash rate. And I think maybe investors are kind of overlooking this. So this could be a really good thing for them, especially being with USBTC. They could do obviously the managed services side of things and maybe use this for AI parts of it as well. But this is obviously a huge growth opportunity for them, and we're just not seeing it in the stock price right now. So we'll have to obviously see how Hut 8 performs with USBTC going forward. And I want to get at least one quarterly result with the combined company to see how things are stacking up for hosting, how profitable is that if they provide all those things separated out. But overall, like I said, there's a lot of information here. It's a lot of good stuff for them. So this is definitely a good sign going forward for Hut 8 potentially, depending on what they do and how they execute, right? Execution is the key here. Normally you want to do this before the halving event. You want to do this kind of in the bear market where things are inexpensive. Things are still relatively inexpensive. So if they can do this relatively quickly, quickly within like the next year. So as we get into the halving event, a couple months after the halving event, if they could get all this stuff done, get it installed, that would be fantastic. How likely is that? I don't know. That would be a tough ask, I think. Okay. But let me know what you guys think of this one. Obviously, I do think it's good news for them nonetheless. Okay. Now, let's take a look at the dilution here for last year, or this past year, basically. We have had obviously a lot of growth with the miners. Some of the miners were growing tremendously. There are some caveats to this I need to point out, and I'll try to point all those out to you. If I missed something, I do apologize. There's just a lot of nuances here that are involved with these miners, that some miners do something, some other miners do something else. So we'll talk about all this as best as we can. And I did not include some of the smaller miners, and then some of the miners did not have information for last year because they went public this year. One of those was BitDeer. Who else was in there as well? Stronghold, I didn't have the numbers for them as well. And then some of the smaller miners like DMG, DigiHost, they're just pretty small. I didn't include those in there, along with, I think, Sphere. Sphere, I don't have data. I don't believe I have data for them for going back to Q3 of last year. So they weren't included. These are the ones that I have data for, the ones that are still relatively good sized and obviously growing. So those are the ones that are going to be possibly diluting the most. Okay. So we're looking at Q3 2022 shares. So I'm actually looking at the numbers from when they reported Q2, right? So we're looking at the beginning basically of Q3 going all the way through the end of Q3 now on that number. So here are the share numbers from all of those, and we're pulling it from the data that we have here on the miners. So if we look at it here, I'll show you where that data is, and it's being pulled in from here. So actually we are using Q3 numbers that they are reporting. So, okay, so we'll use that for the miners here. And then we're looking at Q3 of this year, and that's how we're getting numbers. Okay. All right, get that straightened out. Q3 2023, obviously you know. And then we're looking at the dilution. What is the change from last year to this year as far as how many shares were diluted or added into shares outstanding? And you can see here, Riot added about 39 million, BitDigital added 8.3, Marathon added 105 million. Okay, so a couple caveats here when we look at, maybe start over. So let's start with Riot here. There's a caveat here with Riot that the additional 17 exahash will not be installed until sometime in 2025. So I'm only counting them up to about 21 exahash right now for their future hash rate, which might be based on what was already diluted to get to that point, possibly. It's going to be an estimate. It's not going to be an exact number because we don't know how much they diluted for when and for what miners, things like that. So this is just a best guess estimate on all of these guys here. Okay, so that's number one here. That's kind of thing you want to be mindful of. So BitDigital, there's nothing really, no caveats there. Marathon, there's a caveat here. They did dilute recently about, I can't remember exact number, so I'm going to put it out there, but they diluted about 400 million worth of shares to pay off some of the debt that they had out there, which was about 700 some million shares, not shares, sorry, 750 million in debt. Marathon still has 325 million in convertible notes that are due in 2026 for the remainder of the payments due on the rest of the machines here. So the machines here that are at 24 or 23, whichever number you want to use, is basically half of it, or I would say maybe a little bit more of that is already paid off. The rest of it will still need to be paid off. And then we don't know if they're going to dilute more, which I'm guessing that they will going forward. They may dilute next year when price is a much better place. They might dilute in the beginning of the year. We just don't know when they're going to dilute. So depending when they dilute to pay off the rest of the debt, that's going to be, might be a significant number of shares being diluted. So if they dilute earlier on in next year, 2024, they're going to probably dilute more than if they had weighted maybe towards the end of the next year where we're in a bull run, Bitcoin going up, their price is much better they might dilute less at that point. So I just don't know. So there's a caveat for them as well. Okay. Cleanspark, no caveats here. I think they're fully paid for 16 exahash. And as last reported, they, I believe, stated they only need a couple more million, like 5 to 10 million or something like that, to build out the remainder of the 4 that they bought machines for. Okay. I think that's it. Correct me if I'm wrong there. Okay. So Marathon, 105 million shares, Cleanspark, 112 million, dilution in the last year. That was obviously a lot, but they obviously are growing quite a bit. Marathon, unfortunately, diluted more for HODL than anything else, and I'll show you guys here in a second what I mean by that. Hot 8 only diluted 25 million, and they also were not selling a lot of the Bitcoin that they mined, so a lot of their dilution was just to fund operations, basically, and HODL as much as they can. Hive only diluted 3.7 million, so that was really good there. Bitfarms diluted quite a bit, 106 million. There is a caveat to this one. Obviously, I'm using the included numbers of 44.4 million shares being added to the shares outstanding because they got basically cash for those shares, and they're using that to fund the growth to, what is that, 12 exahash. All right. That does not include the possible growth to 17 exahash, which they have an option to buy more miners. This is only to the 12 exahash right now. Okay, so they diluted 106 million, but they also had, well, in 2022 last year, they were in a bad place where they had a lot of secured debt that they had to pay off by selling Bitcoin and other things like that. So they had to pay down quite a bit of debt. I think they learned the lesson from there, and that's kind of possibly another reason why we saw quite a bit of dilution here. Also, Bitfarms was around since like 2016, 2017. So they've been through almost, I don't know if they've been through 2 cycles with the halving event. I'm pretty sure they were around, obviously, in 2020 when the cycle first, well, not the first one, but the last one was going on. So now they're going through possibly their second cycle as well. So they've also been around for a long time. That's why their shares are quite up there right now, because they had to fund growth and prior to the 2020 cycle, okay? TeraWolf came on the scene here recently, last year. I'm surprised that they already have this many shares, but they diluted 122 million shares, it looks like, from then. And they also have quite a bit of debt as well. There's no other caveats here. I think everything should be pretty much funded for. They still have debt that they have to pay off, and I don't know if it's for the machines or something else. And then we got Cypher. Cypher came on the scene, obviously, last year as well. They only diluted about 7.1 million shares currently. And let's see here. Yeah, I mean, they were basically at 0 exahash last year in Q3. So they've been growing quite tremendously to get to the current hash rate of 6.2. All right. So I think we covered all of the possibilities and little nuances here and there. Riot, like I said here, with if we look at Q3 to Q2 hash rate difference, and then we compare that to the dilution that we've had here, they were diluting approximately, let's see here, dilution per petahash was about 6,000 shares per petahash roughly. BitDigital came in at 9,000 shares per petahash, Marathon at 6,000, Cleanspark at 18,000. Hut 8 was actually a negative because they were at a higher hash rate last year in Q3 at 2.8 exahash. This year they're down to 2.5 in Q3. So that actually brought them down. That's why we have a negative number there. Then we got Hive was 33,000 shares per petahash, Bitfarms 48,000 shares per petahash, TeraWolf at 25, Cypher at 1,000. So that was pretty good there. Then if we look at the current hash rate and the future hash rate, we can see here that different future, let's see here, future difference. So this is how much they're going to be growing into the future still from where they were in Q3 of 2022. So we got Riot at 16 exahash growth from then, BitDigital 1.4 exahash, Marathon 21 exahash, Cleanspark 17 exahash. Is that right? Yeah, they're going to be going, yep, 17 exahash. Cut 8, 4.4 exahash. And this basically gets them to where they merge with USBTC. Hive 1.7 exahash, 1.8, Bitfarms 8 exahash, TeraWolf 8 exahash, Cypher 8 exahash as well on that one. Now, if we look at shares per petahash, how much we're getting that based on where they are currently, Riot basically diluted 2,357 shares per petahash, BitDigital 5.7 thousand, Marathon 4.9, Cleanspark 6.5, Hut 8 5.7, Hive 2.1 thousand shares per petahash, Bitfarms 13,000, TeraWolf 15,000, Cypher 835. And then when we look at shares per future hash rate, petahash, we get a little bit different numbers here. So this is basically looking where they were at, where all of their shares are right now, and their current hash rate base or future hash rate is going to be, and what does that mean as far as shares per petahash. So that's 9,600 for Riot, 35,822 for Bit Digital, Marathon 9,035, Cleanspark 8,943, Hut 8 30,372, Hive at 15,646, Bitfarms 26,839, TerraWolf 28,515, and Cypher 29,760. So that's kind of how things look there. Okay, now going back to like Marathon and Hut 8. If we look at those guys here, let's look at Hut 8, because I think that might be a little bit better example here if we can see it here. Hut 8. So if we look at Hut 8 here, you can see that they just recently started selling their Bitcoin, and not every month, even at that. So you can see that they started selling in February. They didn't sell anything in January, November. And then if we look at the numbers here, we're going back to July of last year. You can see that they did not sell anything pretty much all of last year. And I think I can possibly even bring this down even more on Hide Rose 2 and 7. And we'll see. Yeah, we started tracking it basically in July of last year. That's kind of when things started going bad for everybody. So we started tracking to see how many shares everybody's selling. But I'm pretty certain that Hut 8 did not sell anything all of 2022, which is just crazy to me. I'm okay with dilution if you get it a growth for it. Here, we're not getting any growth from Hut 8 really, and we're only getting dilution in order for them to hodl everything and basically pay their salaries. I wasn't too thrilled about that. I'm still not too thrilled about that. But at least they started selling a portion of it. I think there is a fine line somewhere in between where it makes sense to sell a portion and to hodl some as well. And there's probably more opportune times than there are others as well in that. And we can see the same thing here in Marathon. Marathon did the same thing as well. If we look at over here, you can see here going back to July of last year, they did not sell anything until basically January of this year. Prior to that, they were not selling. If we go back those 7 months, let's see here. Unhide those rows. Yeah, I mean, they sold a little bit here, maybe. I got 26 sells. So I don't know if that was just an error on my part, error on their part. But other than that, we show nothing they were selling. So dilution for hodl, I wasn't a fan of that. Okay, let's go back here. So this is kind of the way things stacked up. You can see, obviously, the ones that have diluted the most. And obviously, shares per future petahash. Okay. So that's how things have stacked up there. And like I said, I'm okay with dilution if we're getting growth. So those that have been growing and things like that, I'm fine with it. I'm fine. Marathon, like I said, is a little bit different beast because they had the secured notes that they use to buy all the miners. So they might dilute a little bit later on here as well. Okay. So always some caveats with these miners. There's nothing ever simple. And then some of you guys have asked, what impact does it have on, obviously, you, me, the shareholders here going forward with dilution? And the only way I could think of it is to give like maybe 3 examples of this. So we got company A, company B, and company C. We all have the shares outstanding starting at 50 million shares. Shares after dilution. So company A diluted by 50 million shares. They got to 100 million shares after that. Company B diluted by 28 million shares. So now they're at 78 million shares. Company C diluted for another 100 million shares. They're at 150 million shares outstanding as of right now. Market cap on all of those when they started out was basically even. They were all at 500 million at that point. And then obviously over the year, we're going to have some growth in these companies here. So market cap increases on all of these, well, 2 of these, company A and company B, are 2x. So they're going to be valued at about 1 billion right there. And company C actually grew more, and they're going to be valued at approximately 2 billion. So share price here is starting share price at the end of it was $10 for company A. For company B was $12.82. Company C was $13.33. And then you invested basically 10,000 shares into each one of these companies here, or whichever one you wanted to invest in or something like that. Your average cost was obviously $5 for company A, $5 for company B, and $5 for company C. Bought value, 50,000 across the board here. Current value, however, this is where things get interesting here. So current value of company A of your shares is valued at 100,000. Your profit is 50,000, so you're up 100% basically on that one. And then you go into company B, they diluted a little bit less, and now you have 128,000 value in them. You're up 78,000 on them, right? So that's definitely an improvement here, even though value is the same on the market cap side of things. The only thing that really matters is how many shares are there. That's going to determine how your stock price does, right? And then company C, they diluted the most, but they grew the most. They basically added, you could compare it to the miners here, they added more miners, whatever, or they made more widgets, they built out infrastructure, whatever it could be, right? But they're valued more because they have more products being out there or more things being shipped out, whatever it might be, right? They're valued at $13.33. So now that's valued at $133,000. So you're actually up $83,000 in profit compared to the other ones that actually company B, which diluted the least amount, and company A that diluted like on the average between those two. So you can kind of see how just the differences in valuation of a company can make a huge impact on your price per share, whether how much profit you gain from it. If a company is growing tremendously, that will obviously help, even though they're diluting. So like I said, dilution is not always a bad thing as long as you have growth for it. But you know, if a company is just stalled out there, not doing anything, and they're just diluting, well, that's not going to help anybody like we have here, right? They diluted more shares, but they didn't really grow any more than the company B, which actually diluted less, and you got a better stock price for it, right? So those are the way things kind of work on dilution side of things. It's the simplest explanation I could come up with on this, but it does obviously have a big impact on your profitability and your profit going forward. So, you know, it's one thing if a company dilutes and they grow. It's another thing if they dilute and don't grow, and then obviously the amount of shares that you have gets diluted in the company, and then you make less. So I hope that makes sense. If you guys have any questions, hit me up in the comments down below, or just YouTube it on, search YouTube. There's plenty of videos describing, explaining dilution, how that impacts the investors in general, whether it's a lot of dilution and growth or just general dilution overall. Okay, but let me know what you guys think of this. I thought this was kind of interesting to take a look at how everybody has diluted over the last year. And hopefully that kind of cools off for a little bit here, especially as we get into the halving event. Not sure how much it's going to cool off or if any. I know that some of the miners still need to get some more cash to pay things down and pay off miners, right? We're going to probably see quite a bit of dilution here coming in from Riot still, having them wanting to grow quite a bit. So that's going to be for next year, more or less. They did have to put some deposits down, but I think they had it in cash, so that shouldn't be an issue there. But going forward, we may still see some dilution, obviously, unless Bitcoin goes really well, and then they could possibly pay it from monthly operations. But we'll see. Okay, so that's it. I think this is a great time to be in the space that we are right now. Obviously, we didn't, possibly the best time would have been earlier this year when the miners bottomed out, but I think right now we're still possibly going to be doing pretty good. So one of the next things I'm working at and looking into is, let me see, it's over here, is the miners' electricity pricing thing. Did add more miners to this. We talked about this in a previous video, I think last week, that I was doing this, just trying to run some numbers on them, how they stack up right now, and then we can do after the halving event. So I still need to find out the, maybe not exact price for electricity that they have, but a more educated guess as far as where their electricity pricing is on it. So if you guys have anything on the miners here as far as what their electricity cost is, and you can share links with me, I would appreciate that. And then we'll also take a look at maybe this weekend as far as where the miners could be going forward. They've had a pretty huge run up here since, well, the last probably 12 weeks or so. So I want to see where can they possibly end up at. Can they still get to 5x, 10x potential? And then it also depends on Bitcoin. But right now we have I think a lot of good things happening with Bitcoin. You got the FOMC thing, you got the FASB thing. You also have the spot Bitcoin ETF possibly getting approved in January. So you got three really good things that are kind of possibly pushing Bitcoin up higher even more. So interesting times that we're in right now, but we'll have to see, right? Data is everything to me. We'll go over the data and we'll see where everything stacks up at, and we'll call it a day. Okay. So again, thank you so much for watching. Spreadsheets are available to my Patreon members. Link is in the description down below. You also get access to the private Discord channel. Great communication there. And still $5 a month there. And then if you pay in for the yearly thing, it's $10 or 10% less. So even better. But that is it. That's my sales pitch there. Hope you guys enjoyed it. Hope you have a wonderful evening. I'll see you guys in the next one.